Hello guys, welcome to the trading Parrot. I'm gonna do the market open update, and the question I'm trying to answer in here is whether we're gonna break below 107k. As I was mentioning in the video last night, that was the thumbnail, and I was saying that that is at risk. The reason I'm saying it's at risk is because there are pretty big amount of liquidations coming from high leverage traders. Over 25x's to 100x are all located at this level. So in today's video, I'm going to focus on what is the possibility that we take first the high leverage that is at close proximity to the price, but of course at the cost of breaking that support of 107, or if we are actually going to go for the 10x's that are currently located at 113. So if you remember, I've been talking about both levels, the 113, the 115, that range at the top, which has at the moment the heaviest liquidity of all range in price action of history of Bitcoin, and we also have the 107, which is just a low-hanging fruit below the price. So let's go into the 4-hour time frame, and let's notice in here that this trend line is producing a price breakout to the upside. After having come for this fair value gap, the price is breaking out at 108. That is something that probably most of retail traders are noticing, but if you focus on this area in here, there is still not global breakout. So if this manages to break out, it could reach 108.8 and still be against a global 4-hour resistance. That is RSI 52, and we will see if it manages really to do that so easily after having reclaimed the support of the 4-hour. The global support got reclaimed. So after reclaiming that, can we really break the global resistance and then attempt to go with a higher move to the upside? We'll see about that. The main reason I'm suspicious on this move is because of all the ask liquidity that we are seeing currently in this 4-hour candle. You can see that the price is pushing up after having put a pretty bullish candle in here that got bought up, but still the ask is at 0.8. That is more ask liquidity now hitting the 0.8 again, more than what we had when we found resistance at 110. Just with a 0.04 in here and a 0.05, the 110 couldn't be broken to the upside to go to 113. So now we have that 0.08 holding barely 108. So we'll see if they can really manage. For example, last times we have 0.8 was around the 109. Price managed to put slightly higher, fill lots of selling orders, and that put the last stop at 112. But that was after a lot of ask liquidity coming in to hold the price. At the moment, we have to admit that we have a cumulative delta that is quite big in here. I don't trust the number that I'm reading at the moment. I'm sure that this is completely broken. It was showing 5 billion. So I refresh it now and getting something that makes more sense. 200k of delta liquidity putting the shorts at risk. We can see how they are holding the price, and that is more or less with orders at 110, 109. The resistance is slightly beyond the level that we can see of 52 on the RSI 4-hour. So again, I'm looking at that ask liquidity to see if it's gonna succeed keeping the price on the 4-hour against that resistance. So from that area of weakness of the resistance, it can actually come back down and hit the 105. If the 107 proves the point of being really that strong support, that's where we get again the chances of hitting the 113. I will say there is no way that we can get to 113 without actually conquering that RSI 4-hour 52 and getting an actual breakout. If we get a breakout, I will say the next level of resistance is around 68. So let's see where is that, and that can bring back the price into all-time high. Just by breaking out from 52, we get a good chance to get into 68, which is all-time high. On the daily, the momentum continues to increase into the dark red. In here you can see it's widening up after the bearish cross on the MACD. The current reading is 430, and in 2024 we were at 200, where we dip in here in November before having the most impulsive expansion of the MACD moving averages. On the RSI daily, we can see that we are holding the line right there at 61. At some point we were below it, but we got bought up to hold that line. The context on the daily is still that resistance at around 76, which I think like now it's not possible. We need to go back in time to go to 76. So we need to push this away. And imagine if we want to really now do a revenge rally, we really need to go in a straight line into 80 RSI. That means that we need a lot of momentum to do the revenge rally. So what is more realistic really is to do the plan B, which is form that channel to the downside, which we say when we broke out in here, the highest likelihood is form a channel to the downside. The second biggest likelihood is revenge rally. And the least likely scenario is to come back inside above the ascending trend line and hit straight away 85. That is very, very rare. So now let's say if we have a channel to the downside and we hit, instead of that 80, we downgrade that to 71, which makes a lot more sense for the current context. So instead of getting to that 76, we're going, let's say, to 71. That can bring the price into 113.3. That downgrade has pushed that from 120 into just 113.5, more or less. Now for that, the price action on the daily needs to reclaim the lost support from the ascending wedge, right? So last night we closed at 107.7, that is below. Price can go back up into 110 and still be against the new resistance of the falling wedge on the price. We still have this 48 of support that is still coinciding with 102. This time is 102.8 and it's the order block that you can see here in the price. So if we were to carry on, like let's say we go slightly higher, we see a rejection from the price falling wedge resistance and we come back down into around 103, that means that we are coming back into the previous range. That is something that we can probably survive if we get bought up quickly back up above 105.5. So where is the liquidity? The liquidity of the degens is located between 106 and 105.2. If we did that, we still don't go into the order block on the daily. We just literally go to the top of the range to do finally a retest. Is that something too crazy to do, too bearish to do? I wouldn't say so. We just had a breakout on the daily and we are building structure by coming back into 105, something that we haven't done in this whole range. So doing it for the first time, I wouldn't necessarily consider it as something bearish. Something that is obviously more bearish than that is to break below the 105.5 and come into 103, test that order block and stay there for multiple days, more than one day, and we are starting to get a little bit too red because that triggers the signal that you get in these areas where you lose the breakout and you come back into the previous range. It calls at the very least for a rally into the point of control or to go to the bottom of the range. So those are 86 and 97. Just saying, it hasn't happened. There is no signal for that, not calling for that. Just saying, if those events go in that direction, that is more likely where we're going. The CPR turned 109.3 so far into resistance. So now that we are defending 107, let's see if we can go back to that resistance at 109.3 and break it back above, maybe form a double bottom, you know, just being creative on how can we get bullish to really continue our journey into 123, which is the top level of May. Something that I haven't said in quite a while is that we are in a virgin month. Being in a virgin month is extremely bullish and rare. We have done that, I think, once during this whole cycle before. And when we did that, we have a very, very impulsive move with at least 2 more months going into the upside. Of course, we break that if we go back into the pivots that are located at 91. Volume still coming down. And an update in here, I don't know if I showed it earlier in the video, I forgot, but in the 4 hour we have the bearish fake out. The RSI bearish breakdown was confirmed. There is an M pattern form that is still holding. And by the way, I was going to show you the 3 M patterns that we currently have. The first one is this small one that had the neck right here at 108.8. That one had a technical target that was completely fulfilled, as you can see. It reached that level. That's M pattern number 1. The M pattern number 2 is this one in here that is thanks to that wick there that has the neckline at 107.5. We broke down, but we are coming back above it. So that is kind of a little bit destroyed. And the third one is the major one in here that you have a huge M pattern, right? So with this breakout, if it starts going too high, it's going to destroy it. No longer an M pattern. But if we break the neckline, which is 107.2, then the target is 103.4. So far, one of the 3 3 M patterns have broken out and succeed, the second one has failed, and the third one hasn't broken yet. One of the ideas that I really like is to go slightly below, breaking down from the major M pattern, going somewhere around 106.4, which is not the technical target of anything, it's just the breakout area to the downside. And think about the modus operandi of the market maker all this time, full of bearish patterns faking out. So if we were to do a fake out in here, how is it going to look to trap retail right here? Well, basically it needs to go to around 106.2, print a new low relative to all these weeks, and at that point we go to the bid versus ask and we see a massive blue bar in here going into 0.15, 0.2. That is how the market maker comes in, slams the table and says, nope, you're gonna get trapped. And people enter in a short in this area. Market maker is happy because first they liquidate this area and then they reclaim 107 and then they go for 113. Just explaining the modus operandi that we have for the past 1 to 2 months, just in case they were to do that. So far they're going ahead with this breakout, and so far the bears are defending that with 0.09 on the ask, which is more than what we have had in all this trading range to keep the price steady. So far the bears are being very aggressive, we have to say. They are increasing their orders to 750, 576, right there at 109. We have a fair value gap right there at 109.4 that hasn't been filled. Maybe that's why they want to go there. And general markets are still against that weekly resistance. There hasn't been major moves really. We are full of bearish divergences as well. It is doable, the breakout, don't get me wrong, but it's got a lot of tension right there to push the price back down. So the bulls need to do some big push in here after having already moved the RSI 30 points straight into resistance. Guys, today at 3 p.m. UK time, we're gonna have another episode of the weekly private TA live stream with all the elite members from my Patreon community. So far, these are the coins that they want me to review. It's a small group. It's 1 hour that we do every single week on Thursdays. You can join live if you're an elite member. You can vote for the coins prior to the event, and the videos are going all live the day after. So if you go to my channel in YouTube and you click live, all of these videos in purple are now for free and they go live precisely the day after. As you can see, the latest is this one. So have a look. Remember that during these sessions is a very small group, 5 to 10 people. I have the chat right in front of me and I ask any questions that you want me to answer, including TA of coins, how to use certain indicators, or do TA of Forex, stocks, whatever you want to learn, I can help. So I'll see you there. Thanks so much for watching. I'll see you in the next one. Bye.